Hey everybody, Dave here, Hidden Freedom, and welcome back to another video. In today's video, we're going to go through all of the dividends received for the month of February. We're going to look at all the buys, the sells. In addition, we will also look at all the dividend increases, assuming there was some. I think there is. I'm getting very close to calling it quits job-wise. I've already put the notice in. Last day will be in the middle of April. And I'll be living off this portfolio and some other investments as well. So if anybody's been following me for quite a while, it's been a couple years in the making here. Obviously a lot longer than that before I started YouTube. But since I started YouTube, there was a good few years there where I've been talking about retiring early or just quitting work to go hike the Appalachian Trail. So if you're interested in seeing this type of content, I'd appreciate it if you go ahead and like and subscribe and set that bell notification for future videos. So let's not waste time. Let's go ahead and get started. All right, we're looking at the agenda today. We just saw Dividend Mountain there. There is a little bit of progress in the wrong direction on Dividend Mountain just because the market's been pulling back quite heavily over the last month and a half, 2 months or so. Hasn't hurt too badly. Obviously, I'm not going to hit the $2 million goal that I had before I quit. But, I think the portfolio is still hanging in there, so I'm not really complaining. And so, I guess it is what it is, right? Everybody's getting hurt. So I do think that the worst is over. I just don't think that the Qs are going to go down 30% this year. So let's go ahead and move on here. So Dividend Mountain we just looked at there. And he kind of went backwards a little bit. So, okay, let's go and take a look at the overview here. So here's the overview page. So 1.19 million. That's down from, I think, 1.15 from the last update, or 1.14 with one of those two. So, almost all my gains that I had over here is pretty much gone. There's still $18,000 of gains here. But, that's just the way the game is. You got to, ride the ups and downs and not get worried about the downs. Matter of fact, if you could, it'd be beneficial for you to actually try to invest more during the market pullbacks, 10%, 15, 20% pullbacks. And that's what I've been doing. So when the market does come roaring back, you will supercharge your investment portfolio significantly. And that's what happened in 2020 and 2021. And, it just supercharged the investments. So that's what I've been doing the last few months, and so it's working out. When this market actually does come back, we'll have a record high, record high for the portfolio and a record high for net worth. All right, invested account value here. $771,000, and then we got cash at $347,000. So yeah, that mostly is just sitting cash in the 401k right now because I'm going to be rolling that out in about a month or so. That'll be actually rolling out into the IRA. So most of it's sitting in cash right now. I really wish I could get that out right now to invest in the market. Hopefully the market stays down for the next month or so. Account totals, there's the account totals for the three separate accounts there. Annual dividend amount, $39,408. That actually might be off by about $3,000. Schwab is showing at about $36,000. Monthly dividend income, $3,284. Schwab showing it at about $3,000. Daily dividend income, $108. Hourly dividend income, $4.50. And let me see, got here account weighted dividend yield 4.88%, account yield on cost 5.23, average weighted 5-year dividend CAGR 5.68, average weighted beta 0.97, so a little bit defensive there. And then we just got the top 10 for dividend yield there. And we can filter on other stuff if we want, but I'm not going to really talk about any of this stuff here. I do make this spreadsheet available if you're interested in it, and we'll talk about that here in a second. So we looked at the overview. Let's go ahead and take a look at the housekeeping here. So yeah, all the spreadsheets in this video are available if you want them. All you have to do is go out to the link that's in the first pinned comment there, and then you can purchase those. And there you go. All right. I think that's actually off. I think it's off by about $1,000, so we'll reduce that. Roughly about $448,000 still left in real estate notes, and there's a bit of news there. We actually are going to get note paid back early by the end of, it's saying it's by the end of March, so there'll be a little bit of a windfall there, and that's most likely going to go into SCHD. I think all of it's probably going to go into SCHD, so I haven't made a decision finally yet, but that's most likely where it's going to go. Let me see. Please support my second channel, Hidden Off Grid, because in about a month and a half or so, I'll be making most of the videos over on that channel just because I'm not going to be able to make any videos over here while I'm hiking the Appalachian Trail. I might throw one or two out there if I get, you know, I don't know, get a hair up my rear and I just decide to kind of ramble on while I'm hiking, I might throw a video out here, but most of the videos are going to go on Hidden Off Grid, at least while I'm hiking the Appalachian Trail. So if you're interested, go ahead and subscribe to that channel. I'd appreciate it if you could support me over there. The last thing we have here is M1 is still doing a $50 referral. So if you open an account, deposit $100, you get $50, I get $50. That is a hell of a deal. $50 you, $50 for me, and all you got to do is open an account, deposit $100. So see the first pinned comment for the link. Okay, all the housekeeping's taken care of. Let's take a look at the dividend portfolio. So dividend increase. Let's take a look at that first here. So we'll go back to the portfolio, and we'll scroll over here to the dividends. All right, and we'll scroll up. All right. Okay, so we have, it looks like 3 dividend increases for the month of February. We have APD there. We had an 8% increase in APD, and that's a little lower than what we would expect, just given the 5-year dividend CAGR is higher than that, and the 3-year is higher than that as well. So they probably had a little trouble, maybe some supply chain issues, I don't know, but it's still an 8% increase, so I'm not going to complain about it. Let's go ahead and clear that flag there, 6.48. All right, clear that one. Let's move to the next one. You got Home Depots. I heard about this one. That's amazing. 15.15% there. And that's a little bit lower than what we'd actually expect because that is a major growth company. But look at that. 5-year dividend CAGR is normally 19. And you get the 3 there at 17%. So I'm not going to complain. 15%, that's pretty good. You know, a lot of the housing market is doing well, but I think that construction and all that has kind of pulled back over the last 6 months to 9 months or so. So let's go and clear that flag there, 7.6 there. And move on to the next one. We got 3M with another increase, and look at that, 0.68%. What are they thinking there? So it is a dividend king. They raised it up to 5.96 from 5.92. Guess what? That still does count, though. So that increased him up to 64 years. But, you know, looking here, it's definitely lower than what we'd expect. So I don't know what's going on there. I didn't listen in or anything like that to the conference call, but it still counts as a dividend increase, and it keeps them a dividend king. All right, let's go and clear that flag. 5.96. All right, cleared. All right, all the dividend increases are done. Let's take a look at the agenda here. And cells. Let's take a look at the cells next. All right, we are looking at all the cells for the month of February. And matter of fact, now that I think about it, I think it might have been actually in January. I did get out of QYLD and XYLD, and I just didn't sell it in February, apparently, or it's not shown in here. I'd have to look to see why. But so I did sell out of NUSI. I did make a video on why and all that. So if you want to take a look at that video, take a look at the right, top right over here, why I got out of NUSI. And also got out of QYLD and XYLD. All right, so I'm still in NUSI. I just trimmed it back significantly. We're looking at the buys here, and so this is where I put part of NUSI, and this is where I put the QYLD and XYLD because I sold out of roughly, it was roughly almost $200,000. So it all went mostly into JEPI and DIVO. Significant went, almost all of it went into DIVO and JEPI. So, and I pretty much split those evenly. So JEPI, $94,643 invested into JEPI. DIVO, $93,251 went into DIVO. And I have a goal to reach about $260,000 in both of those, which they're very close. I think they're only off by about $10,000 to $12,000 each at this time. And then we got SCHD, XYLD, QYLD. Those might have just been dividends received. And I was not in XYLD, QYLD, and NUSI reinvesting those dividends. So that was just dividends received there. Let's go and take a look at the stock allocation, and this is the current stock allocation. This is for individual stocks only in my portfolio, not including ETFs. And we're kind of matching them up here with the S&P 500 because that's where I try to gauge everything or try to mimic, right? So we got consumer staples is always going to be high because there's some major defensive stocks in consumer staples. So 24% for me in consumer staples. You got utilities at 4.6 there, financials 6.8, healthcare at 12.6, materials at 2.5, real estate at 3.2, energy at 5.6, industrial 7.7. We got consumer discretionary at 12.7. We got communication services at 2.0, which is actually pretty low because it's only AT&T. And we have information technology at 17.9. Here we are looking at the dividends received for the month of February. So we received 14 dividends. That's a lot of dividends to receive there. So we got XYLD there, QYLD. We got AT&T. I still own that thing. JEPI, Apple, APD. We got Procter & Gamble, Realty Income, Colgate, Palmolive, ABBV, Caterpillar. We got Starbucks, NUSI, and DIVO. So from the last, you saw the QYLD and XYLD from the last thing we just looked at. Well, those were just the dividends received, and they were not reinvested. So I did not reinvest. I turned the drip off for those and actually don't even own them anymore. And actually, the only thing that the drip's turned off on right now is NUSI. And that's just because I don't want to grow NUSI anymore. So a lot of that funds are going to SHD. So we received over $3,436.59 for the month of February. That's a pretty big month, but it's not a record. The next thing we're going to do is going to update the dividends across the portfolio here, and we'll look at the dividends received. So here's the actual tracker for it. We're going to write all the dividends received across February's line right here. So we'll run a script for that. And we'll go here and we'll open up the script page here. And we'll run this script. So let's go ahead and run that script now.
Are you buying the fucking dip? Yes or no?
All right, script finished, and it wrote the dividends. So we have the dividend meter here. It went to $6,600. We have a goal of 50,000. Won't hit that this year because I changed the actual. I moved the target. I moved the goalpost. I moved it down because I just didn't need that amount of dividend income from the income ETFs. I really just want to get more into SHD to increase that up. So that might not be a target for this year. It could be, but most likely won't be. So, all right, let's go back here to dividends received, and we wrote all those dividends across that line of February there. So we got ABBV, we got Apple, T, and there's all the income ETFs those are actually monthly payers is what those are. So these are red right here, XYLD, QYLD, because I do not own those anymore. That way the last payout I get in those. NUSI got reduced significantly because I cut $100,000 out of NUSI and left about roughly $50,000 in there. We scroll over to the right, 3436.59, and that number matches what we had earlier. So looks good there. Let's go ahead and scroll down and look at the dividend metrics here. And so here's the dividends by month there. February looks like it eclipsed January for so 31.89 for January. We got 34.36 for February there. Scrolling down for dividends by quarter, and look at that. We've already surpassed Q1 of last year, and we only have 2 months in the books at this point. So we're going to get another roughly $3,000 for March, and that'll close out Q1. So that'll put us at $9,000 for Q1. And then we got dividends by year here. So we're already up to $6,600. Last year was $25,700. $25,700, and then this year we're projecting roughly about $36,000 to $40,000, assuming that more real estate notes don't get paid back. So I guess we'll kind of gauge it off of that. But so I didn't mention on this page here that this portfolio is not just a dividend portfolio, right? I do have other investments in this portfolio that are not just dividends, right? So if I go here and scroll over to the left over here, just to show you what I'm talking about, like this right here, the SPY, right? That is going to be roughly $400,000 in the SPY, and that's not really a dividend because I'll be doing options against that mostly. And then we have QQQ in here as well, which right now actually 2 of those got assigned. So I actually have a 365 average on them. And yeah, it does pay a dividend, but it's not really a dividend investment, right? So, like I said, I just wanted to make that clear that this portfolio is not 100% focused on dividends. So that's not my 100% focus. All right, we look at dividend increases, sells, buys, adds, look at the stock allocation, we look at the dividends received. We ran the script, we look at the dividend metrics. That brings us to the options income, and I go through this pretty quick because not everybody's interested in this. So for the month of February, I had a $10,000 gain, and you're thinking, Dave, that's impressive. But look about the $13,000 loss in January. So mostly what I did in January is just roll to February or March, and then kind of in February, I realized a lot of that gain. So, and then just recently I took a loss in March as well and rolled that out to April. So I'm catching up. So, when you have a 20% pullback in the Qs, and that's mostly what I'm invested in options wise, then you're going to take some losses and you're going to have to roll out. And I bet you by the end of the year, I'll be positive, probably by at least 20 grand is my goal, somewhere around there, because I'll be, obviously hiking. So, but that's the goal. And as long as the market stays flat or goes up, back flat or whatever like that, then it'll be a good year. If it continues to go down, it might be troublesome, but just because I keep having to roll the profits forward. So 10,162 was the gain for the cash secured put account. And then we got the covered call account there, where I was just actually wheeling the Qs. And I made $246 for the month of February in that account. And I took assignment of 2 puts on the Qs with a 365 average. And I've turned around and already sold a covered call at 365 against one of them. I have not opened the other one yet because I'm waiting the market to come up a little bit. So here's my Schwab account, and this is all the positions in the Schwab account because somebody wanted to see this one time. So I kind of just show this now. It shows, if I'm reinvesting the dividends, it shows you the cost basis. It shows you, the gain loss. It shows you the percent of the account and, dividend yield and all that stuff. So you can pause the video if you want to look at this a little bit closer. And then we got some ETFs down here at the bottom down here, JEPI, DIVO, NUSI, SCHD. Continue to still build out SCHD every single week. So here we're looking at the actual projected income from Schwab's point of view. And we'll just go to 2020 so we can look at February. So February is in the books, 34 to 37, which is a little bit off, but it's pretty close. And then we got March here projecting to make $3,243 in March. And like I said earlier, for some reason, this is off up here a little bit. My Google Sheets, has it a little bit higher than that by about $200 a month or something like that. So they're showing the next 12 months at $3,033. And that's probably just because the income ETFs are a little bit more variable than individual stocks. So March is still looking pretty good. And then I think, April's going and dipping below 3,000. So maybe we can get that up by then if I can continue to reinvest in March. Matter of fact, that windfall that's coming in should raise up April, hopefully. So, I take that back because SCHD is actually a quarterly payer. So I need to figure out when SCHD pays. So we've pretty much gone through the update here, and I try to get through it pretty quick because I know that this is normally like a 20-minute video. So hopefully I got this one shorter because I have no idea how long it is. So if you have any questions or comments, please leave a comment down below. And anyways, I hope everybody had a great week, great month, and you're surviving the market. So until next time, we'll see you next video. Thanks for watching.